Welcome to Illuminati Silver. We tell you the truth about silver. Today is Monday the 12th of October 2015 and we're issuing this video to update you on the current state of the gold and silver markets and our view for the weeks and months ahead. Well, at the time of production, gold currently stands at $1,162, up a little over 5% on a month ago. And silver stands at $15.85, up a little over 9% on a month ago. Now, before we become too excited by this, we have to place it into perspective. Comparing like with like over the past 12 months, gold has fallen some 5.14% and silver has fallen by 8.33% in dollar terms. We mention this because some commentators are stating that for 2015 gold and silver prices are higher. Now, whilst this is true, it's somewhat sleight of hand. The reason being is that we are currently in the 2 months where traditionally gold and silver prices are at or near their highest. Partly because of the Indian love trade and jewelry trade, partly because of the disappointing jobs reports, partly because of the Fed's failure to raise interest rates, and partly due to the military involvement of Russia in Syria, and some of the consequences which may develop as a result. Now, in fairness, and to be transparent, we predicted back in March of this year that gold was going to fall close to $1,000 and silver was going to go lower into the early $14 territory and below, and possibly as low as $12 by the end of the year or early into the new year. It was certainly heading that way, with gold having reached $1,082 on the 24th of July and silver reaching a low of $14.16 on the 26th of August. Our assessment was based upon current supply and demand credentials, a reduction in world trade, and the possible need for the US to raise interest rates in September, which they failed to do. Peter Schiff was never convinced that interest rates would rise. However, we felt that by doing so, albeit by a small amount, the Fed would have maintained the strength of the dollar and to some extent pricked the stock market asset bubble, which virtually all commentators agree has risen too high too quickly and is unhealthy in the medium term. This did not come to pass, and having seen the jobs report a little over a week ago, we can understand why the Fed failed to raise rates. And even Bloomberg are now predicting no rate hike until 2016. So what does all this mean for gold and silver today? Firstly, we have to say we are still more bullish for gold than silver in the short to medium term. The reason is simply that while world economic growth slows, and bear in mind that the IMF have downgraded growth again for the coming year, silver will be adversely affected because of diminishing industrial demand. To counter this, there is likely to be a movement towards gold by the central banks and larger investors, as it is seen as a monetary metal, and silver's close relationship to gold will also witness an increase in demand for silver as a result. The key question is, will industrial demand fall more or less than investor demand rises for silver? This is difficult to quantify. However, bear with us for a moment. Secondly, Russian and US military actions in Syria are creating political tensions. With much of the Western world embarked on an anti-Russian course, we shall certainly see a flexing of political and military muscles by these two contenders, which will create an air of instability And the one aspect investors do not like, unless of course they're day trading, is uncertainty, and they may very well move towards gold as a hedge. Thirdly, we must still not forget that we are in the season for high gold and silver demand. Gold tends to do well in September because of the run-up to several events that can drive up gold consumption. Jewelry makers start to stock gold ahead of October's Diwali, one of India's most important religious festivals. September also kicks off the post-monsoon wedding season in India. Jewelry makers also stock gold in September ahead of the holy month of Ramzan in Muslim countries such as the United Arab Emirates. In addition, this year the retail squeeze on a number of silver products, coupled with a rising of premiums, also kept the pressure up on maintaining higher gold and silver prices. This may very well subside by the end of October and early November. There is already evidence of more products being made available to the dealers by the mints, which will, we believe, inevitably reduce this upward pressure. Fourthly, we still cannot help but feel that the US jobs reports, which had such a profound influence on the markets and precious metals, may have been a case of getting out all of the bad news at once, and perhaps exaggerating it. In other words, overstate the downward jobs figures, only possibly to revise them upwards next month, and perhaps show a slight improvement for the current month, thereby bringing back the possibility that rates may indeed be raised before the end of the year, or early into next year. This will then serve to stabilize the dollar yet again, without actually having to go through the pain of raising rates. Fifthly, technical traders also have a hand in this. Whereas we have seen their power upon influencing prices on the way down, with gold and silver having reached or breached their 200-day moving average, this could indeed have a bullish effect on both metals and the way in which it is traded. So what is our conclusion from these varying factors? On balance, whilst we were initially surprised that silver passed through the $16 level, we cannot help but wonder on reflection, with appalling job figures, the non-raising of interest rates, problems with Russia, including its involvement with Syria, with September and October traditionally being the months of higher precious metal prices, and a retail silver shortage, why we haven't seen even higher prices for both metals. Now some may argue we shall, and soon. We are, however, still reticent, and are not ready at this stage to say the bear market has turned the corner. Not yet. If you take a look at the 1-year, 3-year and 5-year charts, the trend is still down. There are still high levels of product being mined. The envisaged mine closures have not occurred, and industrial demand, we forecast, will be lower for the year compared with last year. We believe that we may very well see some consolidation at these levels for a few weeks certainly, and then, unless the geopolitical situation gets out of hand, the downward trend may indeed continue. If, however, gold breaches the $12.50 level and silver the $18 level, then we may very well change our position. But even the rises of recent weeks, though a little exciting, are still insufficient to stir the Illuminati blood. We hope you found this video helpful and informative, and would appreciate it if you would give us a thumb up or down, comment, and if you haven't already done so, subscribe. Disclaimer. Silver Illuminati owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we're not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice, and merely represent the personal views of its owners.